9:39 a.m. Pacific Standard Time. The date 7/12 of 2015. I have before us the daily chart on the S&P 500. Now, I am going to tell you once again that in our ongoing super bubble, as it takes time to go down, and it will. And we were fighting with the 200-day simple moving average right here on the S&P, and this is on a daily chart. And nonetheless, we had one top, second top, a little bit lower top, and we came down. I am going to draw, once again, I'm going to draw that lower trend line right there. And having said that, that is going to be where the markets were finding support off of this big reversal in the S&P 500. Therefore, we're going to be taking a look at where we're really going to land. Daily moving averages are all turning over. Short term, that's bearish. But we were in an area, even with the moving averages rolling over in the public setting, is that they showed a short-term oversold condition versus that long-term overbought condition. And they're all public indicator analysis. We're just going to show you here that that green line is a 200-day moving average at 2056. We closed on a weekly level. I'm going to be showing that next compared to this. Is that on 7/10 we opened at 2052. We went to the high of 2081, and then we closed out at 2076. And what was that all about? Options Friday, weekly Options Friday. I'm going to point out that this is going to be the major support level as we do come down and test it. And then we have another level right around the 2020 mark. Okay. Now, what I am going to say is that we got quarterly earnings coming up, and that markets have had that reversal that we have talked about, and it's come down very nicely to a support level. Basically, in our reading, one of the things that we're going to be very coherent of is that we're going to take a look at this weekly moving average on the daily. And I am going to say that because of the amount of reversal that we've had, both the bull and bear have been fighting it out. However, the S&P 500 can trade higher as it may before we roll over. Okay, so I'm calling way down here is that there is a major low. There's a major low that started at 1980 on that S&P, and we rallied up to that high, and we had that big nice haircut. We came back up, we tested that lower high, and we came back down, and then we just shot totally straight up. And that was exactly where that bull was, right there. One of the things that we're going to be very, we're going to take this low right here, the body of the candle, and we're going to roll it right here. This is where we got on the other side of the market right here. Everything that was above here was a tradable range. Buy the dip and sell the rip in the S&P 500 stocks until we had this lower high over here, as we did, and we'll take the body of that and we'll say it's right there, and that's another major reversal right there. One of the things that we're going to be extremely coherent about is the following. All right, here is that topping pattern at 2134. Here are the big reversals on the S&P. Here are another big daily interversal, and then intraday, I'm sorry. And then we got above the 200-day simple moving average, and we're right here closing into resistance on the calendar day of Friday. Today is 7/12/2015. And short term, we dropped 95 points in our calculations, in our market maker calculations. We dropped 95 points from that high. Therefore, when we're looking at these major lows in the short term, we've had a 95-point reversal. And we did have that reversal volatility that we talked about a lot. when we talk about the S&P and what Greece was doing is that we currently said buy the dip on Greece as a short-term trade only, not long-term. And that was because the S&P at that point in time had a calculation that we would pop off of the Friday expiration as we did. And there are other analyses in here on that S&P 500 going into different parts of the year on stockmarketfunding.com. And we clearly talked about all of that throughout this calendar year in 2015. And basically what we're going to do now is we are exactly on the daily chart. 200-day simple moving average is coming into play. We're short-term still oversold. Every move going up here in the resistance levels will be a sell short level or put contracts on the S&P 500. And we've made that very clearly, as this is going to be, when we got below that 200-day simple moving average, they whipped that baby up there and it came right back down. That's par for the course. However, you can see how they whipped this one day up higher, and that's where we closed at, was up on the highs for Friday options expiration. We are going to say right now what the earnings season forward looking here is that they were pricing in some lows going into the quarterly earnings. And we'll be talking about quarterly earnings on a different update. But this is definitely showing us a big volume sell on that doji, and then we come back and we have a big sell down, and then look at that volatility. All of which is showing where that bull and that bear is. What we're going to be looking at is when we do break above that 200-day moving average with more selling, then we know that that reversal would be on the bear side. But we also know that if we can get up and build a base above the 200-day, and that declining 10-day moving average is going to be the key, and that within the volatility range, we can go up and test the 20-day, the 100-day, and the 50-day. Those are all of these moving averages right here. This red line is a 20-day, 2095 is a 100-day, and slightly right at 2100 is your 50-day simple daily moving averages. So we just wanted to make that whole process very clear, and we have. We will be selling into resistance.